Hello and welcome to the program. I'm Ladi Williams. Great to have you join us. Let's take a look at the markets starting in Africa. Nigeria, the NGX had a good week last week, continuing positive, up 0.05%, while the GSE is trading deeper in the green, up over 1.5%. In North Africa, Egypt's share index lost over 3%, while Kenya closed positive on Friday. Heading over to the Middle East, it's all negative. Abu Dhabi dipped almost 1%, but the Dubai index took a deeper fall, more than 1%. Saudi Arabia toed a similar path, down 1.10%, while Qatar's loss was less than the others at 0.45%. And over to Berlin now, the German government has issued a new warning that Russian gas could be cut off in the coming days. It's debating how to distribute the cost of rising gas prices across German businesses and households. We have Stephen Beardsley right there in Berlin with the details. Well, what are you hearing about government plans?
Warned this weekend that the upcoming scheduled maintenance on one of the major gas pipelines between Russia and Germany could be used as a pretext to further turn off gas or completely shut it off altogether. So that's the basis of the warnings that we've heard this weekend, that maintenance coming up in the next few days. Now, let's remember that energy costs are the main driver of inflation here. And so that is the big conundrum, is how do you protect consumers from those rising prices when you can't really do much about energy prices themselves? That's controlled by the markets. That's controlled by really the war right now. To this point, the German government has tried to artificially lower the price of petrol. They've had some success there. They provided a €300 energy stimulus to households, and they've also reduced the cost of public transport. All of these measures have been welcome, but they won't be enough as gas prices continue to rise out of control. One thing that we're going to see today is the Chancellor, Olaf Scholz, is going to meet with representatives of worker unions and industry representatives to talk about how they can keep wages low. What they want to avoid here is a so-called wage price spiral, in which workers looking around seeing higher costs for the things that they're buying demand higher wages, which in turn forces businesses to raise their prices, and then everything starts over again. Some economists doubt that this is actually a danger right now, but this is part of the conversation. It's why the Chancellor wants to meet with these representatives from industry. But really the big question here links back to gas. It links back to energy. Of course, coal and oil are part of that as well, but gas really is such a predominant part of the energy mix coming from Russia, and those spiraling costs are really the question mark.
Right, and German gas utilities are also warning they face serious trouble. What's going on?
Yeah, just last week we saw that Uniper, which is the largest gas utility in Germany, it warned that it was going to need state help to make up for its lower gas imports coming from Russia. Russia has turned back a lot of the import amounts that are coming into Germany. They're down 60%, in fact. That's pretty massive for Uniper, which then has to go and make up those amounts by buying on the market. The price right now is high. It's even higher looking elsewhere. And so it's in financial difficulties right now. The state has suggested that it will help out, it will step in, and Olaf Scholz, the Chancellor, suggesting yesterday in an interview with a German broadcaster that it would look like what happened with Lufthansa during the Corona crisis, the height of the Corona crisis, in which the state stepped in, bought a significant share, but was a silent stakeholder. That is, one that had no say in the day-to-day running of things, and then that stake was unwound quickly by Lufthansa. So they could see something similar happening here, and actually can be profitable to the state as share prices rise. So it's not necessarily a bad thing, but it would not be the only gas utility facing this issue. There will be some others more than likely. One of the questions, one of the levers that the German government has at its disposal is the ability to pass on those costs to taxpayers, or to customers, I should say, of those utilities. It's chosen not to pull that lever to this point, but that is something that could happen in the future. What it wants to do actually is try and spread those costs amongst all gas customers and not just the particular utility customers, and that's something it's looking at in a draft law right now.
Right, it's all about protecting German citizens from rising energy costs at this point. But what can we expect from the week ahead for the markets?
Last week was an especially difficult week, or I should say wrapped up an especially difficult first half of the year for markets around the world, seeing historic losses they haven't seen in 50 years. The DAX was down 19% for the first half of this year, so really we're going to see what happens with the second half. There's not much signs to suggest that it will be much of an improvement, especially when we look around and we see that the fears of recessions are growing and that all eyes are on inflation data and growth data right now. Now, this week we can't expect a whole lot of new information to really add to that picture. There's not going to be any major statements by central bankers, for example. There's not going to be any killer figures that are going to really give us some answers. Those have come in previous weeks, and in the weeks ahead, we can expect more announcements from central banks about what they want to do, and that will trigger the reactions from Wall Street and other exchanges. We know that in Europe, for example, we're still seeing, as we approach quarterly earnings week next week, there is a lot of discussion that perhaps businesses are still overvalued right now. I would expect to see sell-offs in the weeks ahead, especially if inflation stays high and especially as you see further announcements of rate hikes or a further elaboration of what's going to happen with rate hikes when you look at the European Central Bank. That said, the European exchanges starting off today in positive territory. We'll see where things go from there.
We'll see where things go from there. Thank you so much. All eyes on central bankers right now. That's Stephen Birdsey right there in Berlin. Let's look at other markets now. Australian stocks rose more than 1%, while Hong Kong and South Korean markets were lower today ahead of Australia and Malaysia central bank decisions this week. The S&P ASX 200 advanced 1.11% to end the session at 6,612 points, with banking and retail stocks in the green. Japan and mainland China markets were also higher. Nikkei 225 in Japan paired early gains to close 0.84% up, 26,153 points, while the Topix index climbed 1.34% to 1,869 points. In China, Shanghai Composite gained 0.53% to 3,405 points, and the Shenzhen Component rose 1.29% to 13,026 points. And global oil prices fell in early Asian trade today, pairing gains from the previous session as fears of global recession weighed on the market, even as supply remains tight with lower OPEC output, unrest in Libya, and sanctions in Russia. Brent crude futures slipped 35 cents to $111.28 a barrel, having jumped about 2.4% on Friday. U.S. West Texas Intermediate crude futures similarly dropped 32 cents to $108.11 a barrel, after climbing 2.5% on Friday. Our recession fears have weighed on the market over the past 2 weeks. Supply concerns linger, preventing steeper price falls. Now to our next conversation. Globally, the logistics industry has a significant value with a market size of over $8 trillion. The industry saw a long growth during 2020 because of the pandemic and lockdown. But in the post-COVID era, this industry is soon regaining its value. 2018, Nigerian logistics sector was believed to have a market value of over 250 billion naira. And this value was despite, the concerns and challenges in that sector. Well, let's discuss performance and expectations for the rest of 2022. We have join us Stephen Folabadijo, CEO, Logitrack. Great to have you on the program.
Thank you, Ladi.
Right, so with the war in Ukraine and rising inflation, how is the logistics industry faring in Nigeria?
Well, the logistics industry is faring quite good. Going back to the pandemics, Nigerians have invested a lot in the logistics infrastructure, and optimization will help us improve the return on investment. A lot of human resources have not worked in a while due to the drop in freight, volume of export and import immediately after the COVID-19 due to the change in direction of African imports to growth in Asian, North American routes. That's for that. Then the inflation, in Nigeria is quite going high. The price of diesel, because of what is happening globally, the price of diesel, which is quite increasing, has affected the cost in freight and logistics across the country. But again, I believe when everything comes back to normal, everything will be fine.
Hopefully everything gets back to normal and we see rising prices actually go down at some point. Yeah, but Nigeria ranks 110 out of 160 listed on the global Logistics Performance Index. You know, quite a poor rating. What do you think can be done to improve this rating?
All right. Well, it's quite poor. Well, one of the things I think that can be done is, there should be reduced bureaucracies across the logistics sector, and also we need to empower the human resources by training them in line with best global practices in the logistics benchmark across the world. So when I mean reduction in bureaucracies, I mean reduction between the bureaucracies in the custom, NDLA, NAFTA, and all that. What happens by clearing goods and all that. So there should be reduction in that in such bureaucracies, and also the sector should encourage massive technology development, which can see growth of this sector.
And talking about, technology, how's that playing a role in your business?
All right. Well, I would say technology has helped us to run the asset-light infrastructure heavy business model in such a way whereby we can aggregate truck owners. And I would also say the government should pay attention to platform-based businesses, because with that, it can help the government in having statistics to some sectors in the country. Because with our technology platform, we have been able to aggregate different truck assets, different truck owners on our platform, where our clients can request for trips and make trips easily across the country. And also we have helped with technology, we have helped to reduce paperwork in the sector. There are so many paperwork in the sector. With our technology, we have the electronic waybill, where everybody every client that is involved in that chain, those are those that will have access to the documents on that chain. And also with technology, our clients can have 360 visibility of their consignment across the country. That is, they can track their consignment and know where their consignment is at a particular point in time. Well, that's just the tip of the iceberg. With technology, we have been able to do great things for our clients, and they are enjoying our services across the board.
Quite interesting. But what kind of policies would you like to see, in the logistics industry in Nigeria going forward?
All right. Well, thank you for this question. Well, with the ratification of the African Continental Free Trade Area, the logistics sector is going to be a very big sector in a few years. Well, I wouldn't say there are no policies. There are policies, but in Nigeria, we have policies, but execution of policies is one of the main things. We have fine policies in all sectors, but execution is one of the main things. So one of the policies I would also see, I would also want to see in the logistics sector is the players and the decision makers in the sector. They are able to make the sector very viable for those that are serious in the business, not just those that just want to make living for themselves alone, but those that are serious in the business, and also those that want to build the business and make sure they employ people in their business. So with that, when there are policies for players in the sector, and they can be serious investment, as I've said, there are policies, but there are fine policies in the logistics sector. But again, execution of those policies, that is what I think will be needed henceforth.
Execution. All right. Thank you so much, Stephen Folabadijo, CEO Logitrack. It was great having you on the program. We'll keep tracking that sector.
Yeah, thank you.
Well, officially, recorded remittances flows to low and middle income countries are expected to rise, increase about 4.2% this year to reach $630 billion. The projection is an increase from a previous $565 billion announced in the first quarter of this year, as education and health remain leading users and purposes of sending money back home to low and middle income countries. Nigeria received about £270 million via world remittance of June the 1st, 2022. Other top receivers were Zimbabwe, Ghana, Uganda, Tanzania, South Africa, and Somaliland. This follows an almost record recovery of 8.6% in 2021, according to the World Bank's latest migration and development brief, with Kenya being among the biggest recipients in Africa. And to our next conversation now. Last year, startups in Nigeria reported to have attracted over $150 billion, which was 35% of the total investments that came into Africa in 2021. Let's get a sense of VC funding in 2022. We have Oji Udezwe, principal at Product Mind, join us right here on Business Incorporated. Great to have you.
Hi, how are you doing?
I'm good. So how are VCs warming up to startups in 2022, you know, with the economic headwinds we're seeing right now with inflation and rising borrowing costs?
Yeah, so it's been a very interesting year, as you can imagine. You know, market contraction, inflation, and, you know, the asset markets have been inflated for some time, even before commodities. And so a few things are happening in the VC world. First of all, VCs are backing away from general frothiness of deals done through groupthink, things where there's not enough due diligence. I think earlier stage deals are going to suffer. Things that are just, there's no traction and they're interesting concepts and problems to solve. And valuations are shrinking as well, which is connected to the first thing I said about asset price inflation. It's been a bit nuts over the last 3 years. But VCs aren't going away. They're not investing in Nigeria or Africa in general. They're still spending resources, hydrating their brands, supporting existing investments, and keeping startups warm. Because what they don't want to do is that if there's a big and fast recovery, they don't want to be priced out of the market or not connected to the markets they're interested in. And they want to be able to be in a strong position to continue to invest in new deals when the market sort of recovers. So what entrepreneurs should expect is they should focus on traction, on growth and profitability. Hype will not sell as well as it did just a few months ago. You know, luckily, Nigerian entrepreneurs have always been a step ahead because it's always been difficult to raise money from our economy. Entrepreneurs might need to bootstrap a little longer. Remember, if you can do this while driving performance, you may also be able to keep your equity for longer instead of selling it to VCs.
Right, and what kind of questions are venture capitalists asking these startups right now?
So what you're seeing is essentially just a lot more due diligence. You know, the last few, you know, Kernel Fund, which I'm a principal of, has invested in the last 8 years. And in the last few years, we've seen deals that move so quickly that it's really, really hard to get into a lot of due diligence. Well, since the funding cycles are going to sort of lengthen, people will start to ask deeper questions. So some of the things that they'll look at founders to figure out if their prior experiences and insight into the market they're attacking are really strong. So you don't just go into a space that you know nothing about, or at least they have a very serious track record with previous company founding. They're scrutinizing founders for good skill matches to the problem they're trying to solve. So, you know, if you're a consulting or finance type versus you need engineers to build a company, that might be a big mismatch. They're asking hard questions about the market, about the buying power of your customers, about the ability to adopt what you're selling in a low expertise and low infrastructure market. And they're looking at real market size, not hype, which is related to the adoption and use of profiles. So what are people using, not what are people signing up for? And above all, they're looking for signs of traction. They're looking for signs of growth. They're noting the cost of customer acquisition. Obviously, lower is better, unless you're truly an enterprise company or targeting the enterprise space, and unit economics that can be scaled. So these are much more hard number, traction-driven venture capital investment is what you're seeing.
Yeah, so the startups need to do more, you know, at this point. But, you know, an investor might see, you know, 500 million phone subscribers, but that doesn't mean all the phones are smartphones, and it doesn't mean that all those phone subscribers can afford enough data to power up, you know, the app and, you know, be always connected. So how do these investors figure out, you know, the real size of the opportunity?
It's a little connected to what I said before, which is harder question. So the addressable market, which is what a lot of founders talk about, is a little pointless. You know, you see these decks with, oh, Africa is this big, here's a growth trajectory here, the young people, blah, blah, blah. All those things are pointless. They don't really offer investable information. Smart VCs know this. So what is important is what part of the market is gettable. So things like how many subscribers to your service, not just signups. What is the activation rate? How many people are actually using it? What are the retention metrics? People keep coming back and rate. What does churn look like? Who leaves your funnel every single week? Oh, and by the way, are you set up to do anything about all this data? So if you see weakness in any of these things I've talked about, can you recover from it? Can you do things to close the gaps? Startups are increasingly customer data intensive platforms, so they can answer difficult questions for their investors and for themselves. So as VCs stop jumping on the bandwagon, they will insist that their next level questions be answered or they may not invest.
Quite interesting. So what do you see for the second half when it comes to raising funds for 2022?
There'll be probably fewer deals, but all those relationships will be maintained. People who are in danger of running out of money, the VCs will try to support them. I think it's really a chance for Nigerian entrepreneurs to go back to the basics, really, if they're in the tech sector, and to think about their burn rate, how long they will last if they get no new money. They have to think about all these things. You see companies in the West like Coinbase or even Facebook sort of freezing hiring so they can control their burn rate, even though they're very successful. So the same kinds of things need to happen in the startup community. So I predict fewer deals, not just in Nigeria, but all over the world. And we'll see how long this contraction happens, because that's going to probably be related to how long those sort of more famine conditions persist.
Right, and all eyes on the possibility of a recession, global recession at this point. We'll keep tracking all of that. Thank you so much, Orji Deswe, Principal at Product Mind. It was great having you on the program.
Thank you very much, sir.
All right, now let's look at those stories on the African continent. We see trade between Kenya and other countries grew by 102 billion shillings in the first quarter of the year. The gradual reopening of the global economy lifted export earnings across several sectors. Latest data from the Kenyan National Bureau of Statistics, however, indicates that the gains were eroded by the high cost of several commodities that pushed up Kenya's import bill by 12%. Export earnings rose from 171 billion shillings in the same quarter of 2021 to 183 billion shillings as a result of significant increase in exports of tea, coffee, iron, steel, and animal and vegetable oils. This was largely attributed to the increased uptake of Kenyan goods in African countries led by Tanzania, Rwanda, and Ethiopia, which registered an increase of 60%, 29%, and 62%, respectively. And the African Export-Import Bank has announced that Algeria has joined the bank as its 52nd member state. This is contained in a statement by the bank's spokesman. That was over the weekend there. For example, bank member states rose by 38 in 2015 to 51 in 2021. With Algeria's accession, the bank is only 3 states short of achieving full continental coverage at this point. The bank added Algeria's accession to the agreement establishing a Flexing Bank was formalized on June 8th by the presidential decree number 22212. Algeria has the 9th largest population and the 4th largest economy in Africa. It's also a member of the African Union, the African Continental Free Trade Area, and the Great Arab Trade Area. And the Central Energy Fund, on behalf of South Africa's Energy Department, has announced fuel price increases for July 2022, with substantial increases for motorists driving petrol and diesel vehicles. Leaded 93 petrol will increase by 2 rands 37 per litre, while the unleaded 95 will be increased by about 2 rands 57, would be more expensive. That will push the inland petrol price to over 26 rand per litre and over 25 rand on the coast. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. I'll see you tomorrow.